high yield over U.S. stocks?
Well, we collaborated with our we collaborated with our fixed income team and a guy named Adam Richman, just to say, look, even though our base case for U.S. equities is probably about 9% next 12 months, and his is only 6.5% for high yield, that maybe the volatility of the high yield space is so much less that on a risk-adjusted basis, it would be better. So it's more a note for asset allocators, Scott, than it was for, you know, my normal core constituency of U.S. equity investors.
Don't run away from the call now, Adam. Come on now.
No. I think it's all, you know, a lot of people don't think in risk-adjusted terms, and they don't think super long term. So I think it was a good note just to get people to think about the volatility of the underlying security in addition to the base case.
I hear you. I mean, you do hear almost weekly, even last week on this network, Jeffrey Gundlach, yet again, sort of raising warning signs about what's taking place in high yield and what could take place in high yield over the next couple of years.
Sure, yeah, I know people are concerned about it, but our base case at Morgan Stanley is that, you know, we're in a long expansion, right? That things like corporate behaviors and economic factors and credit cycle metrics don't look particularly stretched. So our call has been, as you know, for a long time that the cycle could last maybe till 2020, and in that scenario, we would see U.S. equities materially higher than they are now, and obviously that would be good for certain parts of the bond market as well.
Hey, Adam, it's Joe. So, you know, you're talking about stepping into high yield over equities. Does that mean you have a high degree of comfort and confidence that the volatility we've seen in the energy sector is over, given the significant weighting that it has in the high yield space?
Yeah, I think part of Adam Richman's call is that the disconnect you've seen between high yield and equities is in part due to people extrapolating the energy patch more broadly across the whole high yield universe. So look, we are, as you said, we are optimistic on U.S. equities, but we just think high yield can catch up more and probably have less underlying volatility associated with it. It's not to diminish the view that I have that U.S. equities are going to be, you know, quite strong this year.
Mm-hmm. Hey, Adam, it's Steve. Just a question on equities, and I'm going further out. I hear what you're saying about the gains in the market, and I agree. But near term, it just seems like the wall of worry is a brick wall at this point, and that equities want to back off. You've got Greece, you've got bonds. If bonds really start to ratchet up in terms of velocity, the yield, then...
So let me give you the elevator pitch for why you should buy U.S. equities right now, okay?
Okay.
Number one, I think the bottom-up consensus estimates are too low. That's very unusual. In the last 40 years, there's been consensus estimates. You know, this is the 40th year in 2015. 33 of the 39 prior years, the numbers were too high. All 6 years, they were too low. Recession recoveries, or the year after, where the analysts got too bearish at the bottom. So I have a once-in-40-year setup here where the bottom-up guys are actually too bearish, and we're not in a recession recovery. We're seeing upward revisions in financials and energy and healthcare and select consumer. So one, the bottom-up numbers are too low. Two, I think the U.S. economy is likely to be better in the second half of the year than it was in the first half of the year. That's certainly our house call at Morgan Stanley. And then three is the U.S. sentiment, despite the market level, is not very high, right? We've underperformed, you know, obviously the China A shares, underperformed Japan, underperformed Europe. Obviously, equities look better than government bonds. So I think when you look around the world, you say, wait, why would I sell U.S. equities? Bottom-up numbers are too low. The economy's probably going to be better, and sentiment's not very high. That sounds like a time to buy them, not sell them.